What's going on, you guys? My name is Zach Hartley and welcome back to my weekly watch list video. In this one, we have got a massive earnings week ahead. We've got a couple of big economic events that I want to break down for you, and I'm also going to share a couple of stocks that are at the top of my watch list going into the week ahead. So without any further ado, let's jump right in. Okay, so starting us off with the NASDAQ, as you can see, it has been a rough few months for the NASDAQ. We are starting to see some nice action, at least over the last month. The month of July has been good for us. We are up in the month of July, basically since about the middle of June. It's been a little bit choppy, but we are moving higher. We're approaching this kind of important resistance level right here around 12,500. If we can break through that, it could be a good confirmation of a trend change in the NASDAQ. We're currently trading above our 20 and 50-day moving averages, so that is very nice to see. Now, when we look at the S&P 500, it's pretty much the exact same thing. We've bounced off kind of a key level of resistance, starting to move up over at least the last 30 days. And with the Dow Jones, it's really interesting because we actually bounced off the pre-pandemic highs, and now we are starting to trade higher again above our 20 and 50-day moving averages and higher over the last 30 days. So this could be the beginning of a change in trend in our indices. It's a little bit too early to say for sure, but it is some good signs over the last few weeks. With regards to Bitcoin, we've seen a nice bounce over the last sort of 2 weeks here. We are starting to sell off over the last 2 to 3 days here though. We are above $20,000 though. That is really good. That is a very key level. And as long as we can stay above that $20,000 range, that is going to be good for at least the short term. Now, like I said in the introduction, we have a massive week of earnings. They couldn't even fit enough logos on this sheet, but as you can see, lots of companies reporting earnings. We've got UPS, Coca-Cola, Google, Microsoft, Visa, Chipotle, all reporting on Tuesday. On Wednesday, we've got Shopify and Facebook as the two biggest names. And then on Thursday, we have Apple and Amazon, Roku, and Intel all reporting after the close. Friday, we've got Exxon and Chevron. We've got a couple of other companies in here, but this is a massive earnings week. This is a lot of companies for one single week, and it's very, very exciting. So we're going to cover a couple of the companies in this video, but what I also want to point out to you is the GDP numbers. Now, GDP is gross domestic product, and it's basically the total of the goods and services produced within a country during a certain time period. Now, it's measured quarterly in Canada and the United States, and it's basically the thing that we use to measure the economy in a lot of different situations. Now, the Q2, or in other words, the second quarter GDP numbers will be coming out on July 28th in the morning. And as you can see, the first quarter of this year, that number was negative. It came in at like negative 1.8 or something. And so what happens when we have two negative quarters in a row, that is what puts us into a technical recession. And so this report is really important on July 28th because if this number is negative, that means that the United States is going to be in a technical recession, and it will be in a recession until the next number becomes positive. And so lots going on here this week. We have some major economic reports. We've got some major earnings coming out. And if this is a negative number, this could be a rough week for the United States stock market, depending on how everything else plays out. But it is something you need to be aware of, because if it is negative, that's going to be the buzzword around the news, around the market, and probably everywhere. Now, what caused this and what put us into this situation? Well, here's my opinion. Number one, when COVID hit, it stopped the economy. It spread extremely fast, and by the time people got worried, they just huddled inside of their house. Businesses shut down, restaurants stopped, and pretty much everything stopped in its tracks. Now, because people couldn't just live off of their savings and these businesses needed to continue to operate because this was very unexpected, governments printed money to help individuals and companies. That was their response to COVID. Now, because they printed money, inflation rose to 40-year record highs. You can see the total money supply has increased dramatically, and now we are starting to see that inflation in Canada and the United States is like 8% and 9%, and it's literally at record highs since the 80s. Now, to combat the inflation, the governments are starting to increase interest rates. And that is having a negative effect on the economy because people's houses are becoming more expensive. It costs more to just buy a house or take out a loan or get financing or lease or finance a car. And pretty much everything that has to do with money becomes more expensive because that money itself has a higher interest rate. And because of that, that is slowing down the economy and it is reducing our GDP. Now, if it reduces the GDP by too much to the point where we have 2 consecutive quarters of negative GDP growth, like I just showed you, that is what puts us into a recession, and this is how I believe that we got to this point. Now, the real question is, how should you be investing during this recession? Well, hopefully you've watched some of my videos and you're holding on to some cash, because that is going to be the greatest thing that you can hold right now, because while stocks crash and real estate goes down, your cash only loses money to inflation, and it can be the tool that you use to purchase great assets at very discounted prices. What I mean by that is that I think there are some fantastic long-term companies that are growing extremely fast that are on sale right now, and I'm going to point them out to you here. I also want to be looking for companies that have consistent revenue growth with a path to profitability if they are not already profitable. I want to be able to very clearly see when they will be profitable. And then on top of that, I also want to see reasonable numbers when it comes to price to earnings or price to sales ratios. So I don't want to see a price to sales ratio in the 20s. I don't want to see a price to earnings ratio in the 30s. Those are companies that still have room to come down a fair bit. What I am looking for is really, really good companies that I believe in my heart will be here 10, 20, 30 years from now and be better than they are today. And I want to buy them at price to sales ratios below 10 or price to earnings ratios below 20. Okay, so to start us off here, let's take a look at Google. Google is reporting their earnings on Tuesday after the close. Google is a business that is not going anywhere, that is going to be here for a very long time, and I truly believe that they're going to be more valuable over time. So I like Google. They're also trading at a price to earnings ratio below 20, so they checked the first box, and their price to sales ratio is only 5.4, and as of right now, they're trading in an ascending channel. What I mean by that is we have resistance on the top side at 120, and we have consecutive higher lows that are creeping up towards 120 over the last basically 2 months here. And so we got resistance on the top, and the stock is slowly moving higher. What I am watching for is a bounce off of this support line here or a breakout through resistance. If it drops down below this support line right here, I want it to fall as low as possible, because I just plan to add to my position and scoop up Google at an even lower price to earnings ratio. So I have absolutely no problem with that. Google is one of those stocks that is going to be here for a very long time, and I truly believe that 10 years from now, this company is going to be worth much, much more. Now, Amazon is another company that is sort of in the same boat. Amazon does not have nearly as good earnings as Google does, but they have a huge strategic advantage that is very, very tough to compete with, and that is their ability to acquire new businesses, integrate them into the Amazon network, and use their amazing logistics network to simplify and make everything better. What I mean by that is the marketplace, the health services, the food, pretty much everything is going to be integrated into Amazon, and it's going to be more efficient as part of the Amazon system than it would be as a standalone business. And that's what makes this business so great over time. Currently, the stock price is testing resistance. I am watching for a breakout of this resistance at 125. They're currently trading at a price to sales ratio of just 2.63. They don't have great earnings because they invest all of that money back into the company, but I'm totally okay with that because I like it long term. I think they have a huge strategic advantage, and they are reporting their earnings on Thursday, so I am planning to buy more of Amazon if we see a breakout, or if it comes back down to this $100 range, I'm going to scoop up a bunch at $100. Now the next company here is Coursera. I've been talking about Coursera on my channel for a little while now. I really like the company, and I think that online education is going to explode over the next 20 years, especially as the rest of the world gets easier access to internet, especially at lower fees. And so I personally think that the ability to learn online is going to be a huge catalyst. Coursera and Udemy are going to be the two companies that take the most advantage of it, and I like this stock right now because it's currently trading within a channel, so I am watching again for a breakout to the upside. They have a price to sales ratio of just 5.2, and they're growing extremely fast. And they're also reporting their earnings on Thursday, so I'm watching this one very, very closely. The next one I'm also watching is Palantir. We have seen major resistance right around this $10 to $10.50 range right here, and it has rejected the stock 3 times right now. On Friday, it closed lower, but we have 1, 2, 3 consecutive higher lows, and that is a very good sign for this stock. They have a very steady revenue growth over the last few years. There is a very clear path to profitability, and I'm watching for the breakout of Palantir above $10. That's when I plan to buy in. Now, the last stock I want to share with you is a sleeper. Nobody's talking about it. Nobody is watching this, and it is Intel. Intel has been kind of flying under the radar for a few years, and they're actually trading at 5-year lows. Not very many people are very positive about Intel, but they currently have a 3.6% dividend, and it is being extremely steady. They only have a 23% payout ratio. I will tell you that free cash flow has diminished a little bit, so the payout ratio with regards to free cash flow is a little bit higher, but in my mind, it's still pretty safe. They have a price to earnings ratio of just 6.5 and a price to sales ratio of 2.06. So I personally think Intel could be extremely undervalued. I'm going to be watching this one very closely, and I think it has a major catalyst because the chip bill just got passed, and the US government is literally throwing billions and billions of dollars at these companies to boost the US semiconductor production, and I think that is going to be a major catalyst. I think Intel, Nvidia, and a couple of other companies could be the ones that reap most of this benefit here. So I think Intel has the wind at its back, and they could have a major opportunity ahead. Now, if you're interested in a little bit of free money and you want to start trading for yourself, the platform I use is Questrade. If you sign up with the link down below, they'll give you $50 in free commissions. That's where I get all of these charts from, and I pull these screenshots. I also have a link down below that'll give you $25 in completely free money with Newton. If you create an account, put $100 in there, they'll give you $25. You can do whatever you want with it after that. I promise you it's well worth it. You can make some just really easy $75 here if you're trying to get started. And if you want to get into investing and trading seriously, definitely check out my stock market fundamentals course. It is completely free. You get 1 month of free access to the 10-hour course. So if you can do the whole course in under 1 month, you get the whole thing for free. There is over 14,000 students now, over 400 reviews, and we actually just crossed the 2 million minute mark, which is really, really cool. It is hosted on Skillshare. Use that link, you get 1 month free, take the 10-hour course, cancel your subscription, you won't pay a penny. The link is down below. Promise you it'll be the best free resource that you can find online. Thank you so much for watching my watch list. Please remember to click that like and subscribe button, and I'll see you in the next one. Good luck trading, good luck investing, and we'll talk to you soon.